One of the world's greatest traders, Nancy Pelosi, is at it again, and this time she's making big moves with some of the largest stocks in the market. But what does it mean for us as traders and investors? And more importantly, what's actually going on with stocks such as Tesla right now? Well, it looks like we've been correct so far, and it's almost approaching the $250 options target level. But in today's video, we break down that along with the S&P 500 record close, Bitcoin's incredible crash, can it get worse? And of course, the movement of Wall Street money. It seems to be going somewhere that people don't expect. Join us today as we go through stocks, commodities, and cryptos together right now. This will be a good one. Let's get into it. Well, welcome back everybody to The Daily Show. My name is Tom. We're going through the macro, the data, and everything you need to know for investing and trading right now. But I want to give a big shout out to our American audience. I hope you had a great 4th of July and you enjoyed maybe even some barbecue with your friends and family. So it was a rotational day that you may not be able to see on this heat map. Yes, semiconductors were up. Yes, Tesla was going absolutely bonkers, which we absolutely expected. But it was something a little bit hidden that we'll go through today that was occurring underneath the hood. If it's your first time here, remember to subscribe and smash that bell icon if you want to know more about where Wall Street flows are occurring and you love markets like we do. But let's get into the first transaction report of the day because, of course, Pelosi is back at it. She's purchasing Broadcom, NVDA, and she actually sold Tesla last week, but she did it at not maybe the best price. So not even Pelosi understands that positive gamma situation that we moved ourselves into. Although, on top of that, maybe she doesn't believe in the rally. That's that way you can see it. So what are our big trades? Well, basically, she's going back into what she's loved as they pulled back, and she's selling out of Visa as well, which is kind of interesting on itself. Let's have a look now, though, at what happened when it came to, of course, the FOMC meeting minutes. So we all know GDP is okay, unemployment rates about the same, and labor market is strong. But what I want to look at was the FOMC minutes dashboard. Did we learn anything? And I would say probably not from the FOMC minutes. Generally speaking, it's all the same stuff they always say. And the real question becomes, will they continue to go for an absolute 2% inflation objective? And of course, will we end up seeing a rate cut? Now, the market definitely thinks there is a rate cut coming. It's starting to get priced in, at least in some of the yields, at 66.5% chance of being in this range. But this is as of course September, and a lot of things can happen as we've seen before. Remember, at the start of 2024, we thought we were going to have 7 rate cuts. Now we only think we might have 1 or 2 or something like that. And what's happening underneath the hood in terms of flows, especially into inflation-based trades, seems to be very, very surprising. Here's another chart that's starting to go around the internet, which is the Bloomberg Eco US Surprise Index, which has of course been dropping. But like any kind of bad looking market index, you can counter it with some positivity. First up, I just want to mention, yes, we are in a concentrated market. Here's a great chart from Grant Hawkridge that actually says that at the top of S&P 500 so far this year, 20% of the stocks have basically made up all the relative performance. So you can see here SMCI, NVIDIA, Meta, Google, Amazon, Microsoft, all of those major stocks. As I mentioned in the last video, it looks like global PMI has stabilized, possibly even started to move up. And this might be something we need to continue to cover on the channel, as it does tend to lead into basically loosening monetary conditions. Now, when we see that, we also can get a rise in commodities. And we'll be talking a little bit about metals later on, because there's a massive opportunity that we've already started to see with some of the breaks from our last video coming through over the last couple of sessions. Now, this is a huge deal because, of course, it's led on to a big move in metals, big move in oil, and also a huge move in the Chinese stocks as well. Where the bad move's been, though, has been Bitcoin. I've seen this chart being pretty popular, which is the Bitcoin and the 183-day moving average. Now, personally, I've never used this moving average in my life, but I have seen this chart a few times. And I thought I'd just kind of bring it up and say, do I really think this has significance? I would say no. Now, why do I think it has no significance? Well, firstly, when it fell under here, it only went that a little bit further below. Secondly, it's fallen under here and then just gone back up. You know, sometimes you got to, take a chart and you've got to really break it down. So do I really think this gives you any significance? Not at all. I actually have no faith in this particular chart, but I thought I would just mention it because I do see it going around quite a lot in terms of, it's not just one person, quite a lot of people using it. I just don't think it's giving us edge. And edge is very important when it comes to anything in the markets, as you guys would know. Another thing that I think is interesting is looking at the halving report and seeing where we are right now compared to other years. Now, it's arguable that we might be trading more like 2020. And of course, if that's the case, then Bitcoin needs to go pretty fast from these points if it's going to ride the same way as the other halvings have. But I would say that because this has become such a well-known thing, Bitcoin will do things very differently this time around. We've already started to see that the last 3-6 months in particular have been very different for Bitcoin compared to previous halvings. But if it was going to improve, you can see this next kind of 30-day stretch, it needs to find its low, it needs to start moving into the upside. And I think it needs to do that anyway. The next 30 days are very important to Bitcoin's overall health. Let's go back to the market before we cover that chart though with Ethereum later on. And I want to talk about volatility in the market because as it looks like there seems to be none going around. Now we've already discussed this before. The number of days since we saw a 1% overall down day on the S&P is now sitting at 43 trade days. That's starting to get up there for sure. And of course, there could be volatility anytime around the corner. But 2% down days, yeah, okay, it's been a while. And 3% down days, it's been even longer. But it's usual for all of these things to occur in the 2% and 3%. The 1% is the one you'd be looking at a little bit more, which could happen any time. Now, what about risk on and risk off? Well, risk on seems to be upticking and risk off basically is continuing to go down. And this is a good sign for markets overall. It shows that at least over this next 2-week stretch, maybe markets will want to boost into the earnings season because yes, earnings season is just around the corner as we can see here. And it kicks off very, very fast. I mean, it's literally next week and we start off with the banks once again. It's almost amazing how fast it comes around each time. Obviously, the most important day will be Friday next week. And stick around for the channel because, of course, we'll be going through the banks and then we'll be doing things a little bit differently this earnings season where we'll look at a few of these stocks and see whether, especially after the reports have come out, whether there's any actionable trading technical base. Sometimes markets can overreact to these particular trades and they can give some very, very nice setups. Then, of course, the most important week will be marking in their week of 22nd of July, which basically brings with it the big tech, including Tesla, which kicks off. And of course, I think a lot of people will have their eyes on that and Netflix the week before. So let's jump on over to why this next 2 weeks matters. Well, leading into this earnings season, we tend to have the best 2 weeks of the year. Now, we were seeing some weakness, but after the market held 45.50, 45.40, it basically went on to not make a new high, but it went on to close very strongly. And that's suggesting that it might want to live up to its expectations of the best 2 weeks of the year and start to kind of, rumble in terms of finding that growth. In terms of election years, we're already tracking very nicely. We're basically at the best we've ever been in terms of the most recent history. And you can see that in similar trajectories than this, that we did end up having some volatility that came through in the August and September periods. So I wouldn't be surprised at all for the markets to still see a lot of vol, still possibly get an 8% correction this year. It's kind of normal to see something like that. And it to be in the third quarter in particular. Maybe it doesn't come as early as some people expect, although you've got to just follow the price action as much as you can. Now, overall, will the next half be good? Well, yes, the stats say that generally it will, and that the market will remain quite resilient. And we've talked about this a few times. We know volatility will come. It's the nature of election years. This is the vol structure of the VIX. This is how it happened last time. It took until really August to see that really big uptick in volatility. And the market at the moment is suggesting that it might be earlier, but of course we're going to need to take it day by day and watch the price action as we always do for those events. Now, a few people, I went over on X and I asked you guys and I said, look, what do you want to see a little bit more of? And a lot of you answered, I want to know whether it's okay to buy dips on semiconductor stocks still, if they do occur. And the answer is, of course, it's twofold. Yes, it's always going to be impossible to say, yeah, dips are absolutely fine, because you will need to be very careful about a concentrated market. We've talked about this before. Basically, when a market goes super concentrated and everything becomes worth 10 stocks, when they go bad, it can take a very long time. And in fact, they don't sometimes even recover properly over the next decade. So that's what people are, of course, concerned about, rightfully so. But on this chart, you can kind of see we're about here at this point. Now, at this point here, if we're in a standardized bull cycle, we should have a little bit of period to go. Basically, at least get us into 2025, maybe 26. So it really depends on your time horizon. If your time horizon was 10 years, I'm not sure. Maybe it's not so good. But if your time horizon is only 3 months, 6 months, 12 months, then maybe pullbacks will be okay or even shorter, because really what you're looking at is still going somewhere into here. Now, the problem with trading and investing is temperament. And most people cannot go past 2 weeks, even though thinking they might say, yeah, I want to hold it for 2 years, 5 years, hands up anyone out there. And then 2 weeks later, you're selling the position and you're dumping it off. So you always want to be thinking about what's your time horizon for that particular position and where are you in terms of an overall later cycle bull run. Do we have the signs of a bubble? Yes. Do we have the signs of problems on the horizon? I would say so. Uninverted yield curve will eventually occur. The Fed will eventually cut and there will be weakness in the economy. And of course, the speed at which they cut is the most concerning. And we'll probably not grow forever. We always need a pullback. It's inevitable. It's the way it always works. But that could be again 25 or 26. And we've talked about that date many, many times. So for now, will pullbacks be okay? There's a huge amount of basically bullish sentiment out there for these particular stocks and a lot of money on the sidelines still. So you would have to expect that, yes, people would want to buy it and it would probably do okay. So let's have a look at what's performing well. And I said it was going to be strange because, yes, our inflation-based trades are back. And they're back big time. We've been reporting on this for quite a few days. I've been discussing it in our private community as well for a bit over a week now. And it was pretty clear to me that metals were back. We already saw commodities, as in oil, starting to improve. And gold came back big time. And of course, basically anything to do with higher rates actually came back. You've got financials, regional banks, gold, metals. And all of those were doing the best. Now, interestingly, ITB home builders didn't do very well over that period. And sorry, these lines are out because of the 4th of July. But basically, you can see that, again, even over the last 24 hours of trade, gold stock, absolutely phenomenal, breaking through, and metals in general improving. In particular, copper was a huge breakout, which we've already been discussing several times on the channel. Let's jump into the charts now and have a look at the S&P 500, a big, strong close at an all-time high. And as we know, closing above this wick of last week, we kind of suspected at one point that this might have been a trap-style trade, like a UTAD on a Wyckoff position. But then the market was unable to give us that confirmation. And again, confirmation is key. I saw a lot of comments saying, see, you're wrong. Well, it's not that you're wrong. You're just looking for the key levels. You know, if the key level's not broken, you don't activate that type of trade. And of course, as you can see, once it did this and it was going back up against that 5470 level, the most traded zone, that became very bullish. And the next session was clearly going to be bullish. So you can say, well, which is the trade that I would probably think is better? I would think after seeing this, that trade there is better because you get a very good confirmation of bullish intention. If the market had gone underneath 54.40, 54.50, it was going to tank. That's the way it is. If you see these confirmations, it creates a money flow, triggers events of the AI and the algorithms, and you tend to see these huge flow movements. It's a movement of equilibrium points to equilibrium points. So please don't get it wrong, guys. Confirmation is everything. When you're talking about zones, it's really key. And that's why we bring up the biggest zones here on the channel and discuss them clearly, I would think. So let's now take a look at the futures market. And we'll begin here with the US 500 futures. And you can see that basically we have this completely overbought market on the weekly. Now, I've been talking about how the markets look quite bullish. They do. They look like they're in melt-up phase. And as I mentioned, when I get these types of overbought signals, I'm cautious with price action, but that doesn't mean it's going to sell straight away. 2 weeks was the last time over here. And 2 weeks was the last time over here. So when you get to these reads, you need to be paying a lot of attention to the price action in particular. And as we just mentioned, confirmation is always going to be key. So I've broken down the charts to the most traded zone, sitting around 54.75. obviously broken down where the bears really get control, which is still below that level. And in general, the one-day expected options moves have moved up quite a lot. Now, the market's kind of pushing towards that 5,600 narrative right now, but you'll notice that we have call resistance ahead of the non-farm payrolls sitting right where the market is right now. Now, if the markets do push higher through Friday, a lot of dealers may be caught offside. So basically, because we're in what we call a positive gamma environment, which we'll look at in a moment, markets would need to continuously push up. And basically, that's because they'd need to be hedged during the session. Now, if the market does pull back somewhere into this 54.75, 54.90 zone, then you would have to expect that to be an initial buy by bulls because, of course, there was a lot of trades that went through there. And as we know, where would the bears be in control? Well, it wouldn't be until underneath that level. So for now, the buyers are firmly entrenched, and we can see that when we look at these option spreads. Things change big time from where they were. Now, where are the puts? 54.75, no surprise. Why? Most traded zone. But as you can see, the calls are everywhere now coming into the non-farm payrolls. So as we jump every couple of points, there's going to be hedging and hedging and hedging and hedging that needs to be done. So if the market's going to close, I guess perfectly for the street, it would close just underneath 5,500 on Friday. But at this stage, if it does remain bullish through the session, especially with the news, yeah, it could get kind of pushy. And of course, positive gamma environment is taking over. If we have a look at the S&P and the NASDAQ CTAs on the bull end, S&P on the neutral side, gold CTAs absolutely hammering forward. We saw this first last week. We talked about it on the channel. This is a great first sign. Then we saw price action with it. Boom. That's the one thing we are looking for on these markets. And of course, it pushed into some excellent gold trades and excellent copper trades and metals trades in general over the last two sessions. You can see here copper really flying up. What was interesting was to see Brent pull back a little bit, although price has hit our first target. Of course, we still would like to see more from Brent, so interesting to see CTAs go down. But overall, we hit one of the first key levels. Let's have a look at two other big options, kind of GEX level zones here. Of course, the positive gamma of Tesla pushing the narrative of the 250. Man, the options moved big time this week. And it pushed all the way to really our major level, which is 250. Now, people are really going crazy on this already. It's amazing how fast Tesla can get there. I've seen people calling $1,000 for the stock already. Now, those people are delusional wonder chasers. Who knows what they're doing? And I wouldn't listen to them with the 10-foot barge pole. But anyway, the way that I would always go with it is, yes, we're about to hit a massive supply zone, which we'll look at on the charts. We know 250 is a key level psychologically. If it does go through it, then of course that's going to create even more positive gamma events. But you can see this week with options expiration where it's at, everything above 240 needs to be partially hedged off. And that's going to push, more and more positive kind of sentiment. So I think 250 might be a little bit too much for this week, but the weekly close will be super important. NVIDIA is kind of the same thing. We know that it's stuck between 115 and 130 at the moment. 130 is where things get a little bit more ballistic. So if the market does want to push through 130, then that could mean dealers are offside again, positive gamma environment again now on NVIDIA. And with Pelosi buying, I'm sure a lot of people will be trying to jump on hers. They love it the next couple of days. And we'll go through where we think that chart could go to next. Although I still think it might be range bound for a little while. Let's jump into the broader market. So of course, we know we've got the S&P 500 at some overextended levels. That's fine. Doesn't mean you sell it straight away or anything. And then we move over to the central bank liquidity, which of course has been downtricking a little bit, but it did uptick in the recent sessions. We'll keep tracking it, see if there's anything there for us, but yeah, it has upticked a little bit. What about yields? Well, yields still remain very tight, 4.7 on the US2, obviously waiting for non-farm payrolls. And I just want to mention again, the uninversion of yield curve got closer this week, first time in a little while. So, of course, if you get underneath this one, make sure you alert yourself to that. It's going to be very important in the future. Now, our combo of the American consumer versus staples has been going up, which basically says that the market believes that there are, some purchases out there and maybe the economy is still doing okay. Do remember that Amazon and Tesla make up a good part of XLY. So Tesla's a huge component of why this combo is doing quite well at the moment. All right, let's jump into the broad market. We'll look at the US dollar first. Now, it fell off from this resistance zone. So you can see here, hits the resistance zone. It's falling off from that level ahead of the non-farm payrolls. It's actually making decent moves ahead of the non-farm payrolls, which I find surprising. And it's broken the series of higher highs and higher lows. So it's actually gone to a lower low. It finds itself right at that really important 104.70 zone. And I guess, if it goes underneath there, you're starting to say, all right, well, I think this dollar is now going to start making its way back down. At the moment, it's been very, very bullish in recent weeks, as we've talked about. But there's a lot of analysis to do here on the dollar after the non-farm payrolls day. So I'll do that on the weekend one, and we'll break it down for you. Now, what has been doing really well is the silver and gold market. So some exceptionally nice breakouts here. We'll just cover silver first, then we'll go gold because it's more important on gold. And you can see that the weekly would be putting in a pretty interesting close here, coming off a level I didn't really expect it to come off. I thought it might have gone lower back into like 28, so interesting there. But I'd like to see it close a daily for silver above 30.80. Now, if it can do that, that's very, very strong for silver. And when we go through copper here, you'll notice copper's already done what we wanted it to do. It went through the 20-day moving average. Look, another great session. That's great momentum trade there from that point. And it really says that basically pullbacks now should be met by bull demand. Yes, we're in the resistance, but I think this is a significant change for copper. And copper actually went from making, basically a series of lower lows and lower highs coming off this 20 moving average to absolutely blitzing it. And when you put it on something like the weekly, we consider the CTAs as well improving. If it closes strong like this, that's a great sign for copper moving forward. So a lot at stake for metals this week to hold these rallies, but it could be the beginning. And as we mentioned, we knew this was going to be a weak copper period. It came bad. This is the first sign of great strength coming out of the metals market. So metals market across the board really improving at this stage. Let's now move over to gold. So as we mentioned in the last video, we thought the most traded level here, if we did blitz that, we were going to be in for some good day trades to the upside. That proved to be true, I guess, from our TA perspective. And at the moment, it's still consolidating. And it's consolidating just before this key little resistance here. This is, of course, in some people's eyes, an inverse head and shoulders. If that's got a bit more distance, probably something like 2400. But in general, this is the first, again, positive sign we've seen out of gold. And I want to go back to the weekly because I think the weekly is the most important chart here. Look at this. It's a series of dojis. So we had a long leg doji, a long leg doji, and then maybe now a decision candle to the bull end. Again, it depends on Friday's trade, but this will be a big sign. And again, what do I think is going to happen with gold in the future? Well, I've said it for a while and I'll say it again. I still think gold can do $3,000 an ounce. Now, that's my own personal opinion. Make sure you have your own ideas. Sometimes people say outlandish things. I don't think it's that outlandish. I've said it for a long time now. And it makes sense, I think, with late cycle investing. So let's have a look, find out whether gold can get this weekly in. Some exciting times there on the metals. US oil going and contending again with 84 a barrel. We've seen this twice now. And you can see if we go down to the smaller time frames, it's still pushing that higher high, higher low narrative. So in general, oil still remains bullish on our end. We'd love to see it back to something like 87.50 a barrel. So looking for a new high here, ideally for oil, and it's still doing quite well. Now let's move over to the kahuna. And I will say congratulations, guys, again, because you know what? Tesla is just that thing. You watch it, you look for the signs. And I do love this one because it's led on to a very, very nice rally. And I guess it was quite predictable when you looked at the GEX, when you looked at the positive gamma, when you looked at the overall stealing in the system, and of course the largest positions. And I'd encourage you to really do some study on this one, as it is kind of replicable, as I've mentioned before, and you can kind of pull these types of trades out of other stocks. Anyway, Tesla, everyone's on it now. Everybody's upgrading it, $300, $400. The targets are coming in everywhere from different providers, but Pelosi sold. Now, I think she actually sold on the 24th or 26th of June. So she sucks in terms of trading Tesla. But obviously she's made some amazing longer term calls. So does she think it's bad? Well, we don't know that. But what we do know is it's coming up to the 250 target. So 250 to me is a huge level. It has options all over it. We've got our previous peak. And do remember, we're on a rocket ship right now. Now, while momentum trades do tend to keep up, and one thing you could do is you could say, well, I'm going to descale part of my position and look to see a sign of it actually turning, because at the moment, this thing's just ballistic. That's kind of been what a lot of people have done, because you need to look at Tesla's history. When it runs, look, it goes epic, and it often smashes through resistances and keeps going. And you can see over here, it went epic, and it overshoots, basically. It has these huge runs, then does nothing, then has huge runs. Now, why is that? Well, it's because of a lot of us, the retail traders. Us, we're psychos sometimes, and we all jump in on the calls, or some people do, and of course push this huge positive gamma short squeeze style trade that comes through. I still think 250 is going to be a little bit of a hiccup zone for it. If it does manage to close above this point for the weekly, then don't get me wrong, we'll reassess it. And at that point, you guys might be kind of excited to know that this stock could easily be going into the 280s or even the magical 300 again. So yes, the weekly close will matter, but for now, I think the 250 is probably going to be a bit of a hiccup zone for it just before that area. Now, a few people have been asking about AMD, and I thought we'd cover it again. I have mentioned it a few times. Why? Because it is a lot of wicks, and it's actually been sitting for quite some time. 1, 2, 3, 4, 5, 6, 7 candles that are kind of all dojis or equilibriums all around the same area. Now, AMD's actually put in what you would think is a bottom for the stock, and it did that back over here in kind of the April-May period. Then it pulled back recently twice and found this beautiful 61.8 retracement. Now, I do like how this weekly possibly is going to close, and if it does close above the 166.50 zone, I'd be starting to get pretty bullish on AMD as well. Again, everything can break, everything doesn't have to work each time, but the chart is, of course, improving. And when you look at the daily, it also looks like it's improved just in the last sessions, where it actually broke past that 163 it's been struggling with for some time on the closure. So yeah, I think that AMD is looking a little bit more interesting. Semiconductors in general have been coming back, but AMD never followed the rest of them. It's doing its own thing. And all of these were bouncing out. So you can see here, semis versus the SPY bounced off the 20 moving average. And it brings up the question now to see whether NVDA is going to do a 61.8 retracement. So basically, this would be what I usually expect. And I've expected this since we saw this fall off. Something like this, and then ideally movement up later. Now, why do I expect it still to be a bit weak? Well, it has to do with the fact that it moved really quickly. We know that usually with semiconductors moving quickly, they then go into a slump period. This is a seasonal slump period generally for NVIDIA. And I just feel like it's probably going to go sideways for a little while and consolidate. So while it might get up to these points, there's a chance that it's still going to consolidate. For an investor though, who cares? The stock still looks good, and I'm sure it'll go to an all-time high at some time in the future. There's a good chance of that. Now, let's go over to something a little bit more interesting for the time being though, which is the Chinese stock market. Can anyone tell me in the comment section what that setup looks like right there? If anyone answered island reversal, then you would be correct. And of course, you can see here it's a gap down and a gap up, quite strong coming off that base. And this seems to be across a lot of positions. So we saw Tencent have a really nice day on it on Wednesday. Then, of course, it's kind of consolidated while the US is closed. And we've got the HSI as well coming off that weekly 20 moving average. It's not quite put in the work to get a proper turn in it yet. But if you're a 2-hour based trader, you would have already been bullish around this area based here, which is 17,580. And you are hoping that this thing can at least clear an 18.2. If it clears an 18.2, that's a good first sign. And certainly the Chinese market is starting to heat up once again. And this is due to, more announcements of buybacks, more announcements of support, etc., etc. Now, a few people are wondering, is this some kind of Wyckoff base? Certainly could be. But again, you'll need to see it break these more key pivotal zones, 18.5, etc. If it does that, that's when you're going to start getting those swing traders coming in, and you'll get the bigger investors also piling their momentum behind it. So it's early days here for Chinese stocks. Tencent, HSI, KWeb certainly looks pretty good. Now that's of course just a proxy, but as you can see, things are improving. First signs in a little while. We're back above where we were the other day. Yeah, maybe we can contend with this. And a few people are going to say, but Tom, the daily 20 moving average kept it down. Well, not really, because it closed above there. So don't worry about the daily 20. It's not really doing anything for HSI in recent weeks. Let's continue to move through the US market before we go over to crypto. And you can see the Qs again showing the same signs as the S&P, an overly extended market, which may go for a few more weeks, and then I think we'll have a pullback. Now, why? Well, it just makes sense. Whenever you get these kind of extended reads, we've seen it before. History tells us generally got a few weeks left in it. And again, I'm not going to necessarily, I might say that, but you wouldn't trade it unless you get price action relation to that particular read. So you need, number one, TA to come with you. And always remember, it's very important that technical analysis comes with you with these trades. So yes, we're at an all-time high. Yes, it's similar to the S&P. I would use the S&P 500 analysis if I was going to trade the NASDAQ. If the pullback came back to the most traded zone on the S&P, that would probably be a good point for the NASDAQ as well. Russell 2000s, nothing. I don't think this is interesting at all. 2100 plus, it is chop city. It's not a good place for you to be trading unless you really like trading inside of that chop. So I'd be very careful there with the Russell 2000. Let's move over now to Bitcoin. So it took out the first major support of 58. And if this closes a weekly, so a weekly close happens here, I don't see how it won't go to something like 51.7 or even the dreaded 42.6 zone for a few people. Now, does that mean the bull trend is over? Well, a lot of people are talking about what they call the M signal or something like that. I think it's the McDonald's signal. Basically, it's a double top. So you've got a high here and a high here. Is this an M signal? Yeah, I mean, it's a double top. And yes, it is almost broken to the downside. Again, the weekly close will confirm that. Does that mean that we're going to the 42? Well, I'd be very careful with completions of these. I think everyone's going to see this pattern. It's not hard to see a double top, obviously, in the markets. And whether you're on the weekly or monthly, everyone can see it. You notice it here. You can see those rejections. Obviously, again, I've got extended periods on these, which you can see how those kind of indicators often do work. But you can see here the weekly close would be significant. So we're going to possibly make it towards the most traded level. And I'd be watching a lot of reaction around this low. So we've got a low here that was formed back in May. I want to see how the market reacts to that. There could be some great scalps even on the buy side if the market reacts the right way on the small time frames. But if it takes that low, closes the weekly, there's really nothing holding it up here in terms of structure. So the percentage chances become much more clear that you're going towards 51,750. And at this stage, that's what you're going to have to suggest, because unless that little watch reaction here holds up and the weekly reverts strongly as of pretty much next couple of sessions, you're not going to really see what you need. Now, if the market was to revert and go back above here, I'd be so bullish. But at this stage, I'm just going to kind of hold back and say, yes, I know where we're at in the halving cycle. Yes, I still believe Bitcoin will go higher, but timing is everything, pricing is everything, and you've also got to remain in a cool head. Does this look like an epic crash for Bitcoin? No. It usually falls 30%. And guess where 30% lies? Right there. So 30% lies right around 51,750. That would be, not a bad pullback at all. What about Ethereum? Well, Ethereum also finds itself on, I think, a classic watch reaction here level. Now, if Ethereum and Bitcoin bounce at the same point, this would be where day traders should be looking at them. The exact area here is where I would be looking for those temporary buys, those scalps, those types of things. But if this level fails, and of course Bitcoin starts to go bad, well, Ethereum's going to take these lows, guys, and I think it's going to go to 2,800. So just be careful. It's very volatile. Scalpers will be looking very closely here at structure creation, and position-based traders will be looking for a bit more. And of course, everyone else that's looking for the downside, well, they're hoping for the 2,800 on Ethereum, etc. So what's the most important news? Well, we know it's the jobs numbers. It comes out on Friday. It's going to be a lackluster day of volume, you would think, because of the 4th of July holiday. So be careful out there. 8:30 a.m. New York time, non-farm employment change. We'll cover that on our weekend video. And as always, guys, if you enjoyed today's video, please remember to subscribe, smash that like button, and happy 4th of July to all our American viewers out there again. And I hope you enjoyed today's video. It looks like metals are back pretty big way. Obviously copper, gold, some amazing signs there of recovery. Gold stocks as well, GDX breaking through. So some really nice stuff, and we suspected it for quite a few days. This is why we run the channel. This is why we talk about flows, because most people don't look at these things. Luckily for us, we do together. Bye for now.